Yo guys, what's going on? First of all, let me first apologize, number one, for the poor camera quality. It literally just arrived today. I haven't actually mounted it properly. As you can see, I can move it around. So I'm just resting it on the top of my laptop for the time being. I will get it mounted properly. And it's not actually the quality that I wanted. So I may return it and get a better one. Um, yeah, just one of those things. Now, today's video, I'm going to be going over the top three things that can make you a profitable trader. Some of the most important things that obviously you need to have locked down in order to be a profitable trader. Just going to be a quick video. I feel that too many people, they spend too long on subjects that don't necessarily need to take that much time. You can spew these out in sort of 5-10 minutes opposed to like a 20-minute video. But first of all, let me just take you guys over to my Twitter page, where if you drop a follow, I'll leave a link in the description. I actually called a nice trade on GBP USD. This was me. I called it actually early in the Asian session, saying that obviously I wanted to see, either one of these two levels hit. Price came in and I executed the trade, and I made a nice $5,000 there. So make sure that you are following the Twitter. I am going to be dropping a couple of trades in there for you guys, maybe 2 to 3 times a week. So do hit me a follow on Twitter, and yeah, tag me in a tweet. Let me see a trade and setup and what you're working with. Now, let's get into it. So the top three things in order to become a profitable and professional trader. Number one is a edge in the market. Before you dive into psychology, before you dive into anything else with trading, you need a statistical edge, something that you can repeat over and over again with consistency that has zero discretion. If X, then Y. If this happens, I'll do that. If that happens, I'll do this. If this happens, I'll stay out. This is because you need to have consistent processes in order to find consistency, if that makes sense. How can you expect to have consistency when your processes and routines, let's say, aren't consistent? So that's obviously number one. Technical based, which is obviously the foundation of trading. Then you can dive into psychology and stuff, but that comes at a later date, obviously, once you have developed your statistical edge. And you need to be confident in this edge. You need to know everything about your edge. For example, on GBP USD here, right, I knew that my edge played out here, so I took the trade. Ultimately, it resulted in a break even had I held to the high, but it was Friday, so I did take profits at 5R. I like to call it 5R Fridays. It's what I do usually on Mondays and Fridays, as I've realized from data gathering, Mondays and Fridays aren't the best to obviously hold the trades. They do tend to result in more break evens, and if I just take profit at 5R, I take a lot more wins on Mondays and Fridays. So my edge showed here, which I took it. My edge showed again here. However, I was at the gym, so I missed this trade, which is absolutely fine. So I stayed out because after that, my edge was not present. I didn't try to, sell here or, buy, because it's not my edge. I know my statistical edge, which has a 74% win rate across both London and New York sessions. It's got a 68% win rate in London and an 80% win rate in New York. So combining those and doing the maths on that gives me an overall win rate of about 74%. So if I were to take a trade here, for example, which doesn't fit my edge, I'm then playing with probabilities. So I'm skewing the odds out of my favor because I'm taking trades that aren't within my set criteria. I hope that makes sense. Now, number two is discipline. This is very important because you need to be able to follow that edge systematically for an extended period of time: 6, 12, 24 months, 36 months, 2 years, 5 years, so that you can gather enough data on that system to then decide long term if it's something you want to continue with. You can't base your strategy, or you can't base changing your strategy off, say, you take 3 losses in a row. Well, so long as that these trades fit your overall criteria, you need to have the discipline to stick that through, stick with your trading plan so that you can see those winning times. For example, my edge, like I said, has a 74% win rate. However, that doesn't mean that I'm going to win 7 trades and then lose 3 trades consecutively. I might take 5 losses in a row and then 12 wins in a row, or they can be distributed however they want to be, because obviously the market ultimately does what it wants to do. So you need to have the discipline to stick with your edge for a long enough period of time that you do see profitability. So like I can come over to this again, right here. Uh, there was a trade that I could have taken down here, right in the Asian session. However, it doesn't fit my statistical edge. So I kind of knew or had a feeling price was going to rise from this area, but it's not within my set criteria to buy here, right? I wanted to buy down in sort of these levels. So I had the discipline to wait out, even though I kind of knew, like I said, I had a strong feeling price was going to go from this level. I didn't want to skew the probabilities of my strategy out of my favor. So I just didn't take the trade. And then lo and behold, the next day, a trade came that fit my plan perfectly and I took it, executed, and made money, right? So the individual days don't matter. You need to have the discipline to say, okay, today my edge is not present, so I'm not going to trade. Or, okay, today this is my edge, let's trade. Ultimately, this long here didn't fit my statistical edge that I've gathered data on, that I have extensive data set on. So I didn't take the trade. And, some might say I missed out on 136 pips, but it was never my trade to take because it doesn't fit my specific criteria. Now, the other thing, and ultimately probably one of the most important things with trading, is you need to be very, very thick skinned. You need to have the ability to bounce back from your failure time after time. And you can't let failure affect your mental state, because think of it in the gym, right? What happens when you consistently take sets to failure? You get stronger. This aids muscle growth, right? This aids hypertrophy, I think they call it. So ultimately, when you take a set to failure in the gym, you come back stronger, so long as obviously you've got your nutrition dialed in, and rest time, etc., etc. The fundamental result of that is you coming back stronger the next time. So you need to have the ability to bounce back from failure. This builds your character. It helps you build longevity in the markets, as it's a very trading is a very demanding thing. In my opinion, it's one of the most difficult careers that you can set out to do, because the human mind is not designed to do something like trading. It goes against our psychological, whatever it's called. I'm no bloody scientist. And again, your thick skin, this allows you to stay with your one trading system for a long period of time. It allows you to weather those drawdown periods, those losing periods, because okay, I've taken 4 losses here. It means I'm one trade closer to having my winning trade. And so long as your risk to reward is in check, you might take 4 losses and you think, oh damn, that's 4 losses. I'm loads of money down, etc., etc. And then if you don't take that next trade, that next trade could be a 1 to 7 or 1 to 8, which would put you 3 to 4% back up, right back into profit. And you think, oh no, my trading system shit, I'm gonna switch systems, and you miss that trade, and then you get angry because you missed that trade because it turned out to be a winner, and this can just spiral into a negative spiral. And you just need to understand all systems have drawdown periods, they have losing periods. You can't be switching things up when stuff gets tough and stuff gets difficult, because you have that statistical proven edge. Let's say you go through a losing period of 4 trades and you think, oh, my system's not working anymore, I'm going to change and I'm going to do this. Then you switch to a different system and you could take 4 more losses and you think, oh, this system's shit, I'm going to switch again. You change, you have 1 win and then 3 more losses. So you change again. Well, you're not sticking with something long enough to see those winning periods, to see the statistical edge play out over a large enough sample set of trades. I hope all that makes sense. It's, if you can dial these things in, of course you can fit risk management in there, but that I guess comes under discipline. Then you can really excel in trading. Anyway, hit me up on Twitter. The link is in the description. I'll get you those trades out next week, and let's stay winning together. Peace out, guys.